Hey, good morning. It's been a minute. How are you? Good morning. I'm just getting all my stuff set up. Mostly set up, but I'm just getting the rest of it going. Yeah, um, definitely want to talk about it this morning. Rare off Monday. Well, that's nice. It's always nice to get a day off. Get some leisure planned, relaxation planned. You're like, nope, just gonna stare at the stock market. I don't always do things on my day off because sometimes a day off is just nice to just do nothing. Yeah, or do housework. Catch up on some things. So the market this morning opened pretty green. I mean, overall, this is looking really good on GME overall. It's a mixed bag because, and I'll get into this in more detail in a few minutes, but like almost everything had this kind of gap up today. Yeah, Palantir just kind of seems like it's unstoppable. It's gonna be nasty if and when it hits the top soon, and I don't know. I thought it was gonna rally for a bit after earnings, but I also figured that it already had gone up like 20%. It had made such big moves, but there's some pretty top like analysts out there who just keep kind of pumping it basically. Um, but yeah, I mean GameStop's up almost 7%. Like I said, it's kind of a mixed bag because when you look at the bigger picture, there's two competing trends here. One is like downward parallels, the other is like rising parallels. And really what we're doing right now is we're back testing a rising parallel that we dropped. So it's not quite enough, and I think I've already made this pretty clear, like where my level is for where I expect to kind of see any kind of entry, which would be up here around 2750s. And we'll see. I mean, if it hits it, it hits it. I thought last week was going to be the final lows slash a big up week. So I had in my mind, timing wise, was thinking this would come down a lot faster. It sort of just took a lot longer. We had a secondary distribution here, which it is what it is. It takes time sometimes. And then GME came down. When it started coming up, I figured it was probably that. And I think last week I had drawn like this. Oh, this is all locking. I had drawn like this or something. I thought it might come a little bit higher and then drop down. I just thought it would push that creek. It did push it, but just barely. Kind of like two little wicks above. And that's fine. It's just a test of it. And then it retreats really far. It goes down to those 25 levels. I don't like that it dumped 25 and got below it. Got all the way down to like 2450. Just not a big fan of that. I don't really like what we're seeing here as like a hook potential. It's a very important zone for us. There's an intersection of upward and downward parallels. And so if it stops here, it's not exactly like the end of the rope, but it is very much a rejection because you got two big whammies right there in one spot. So we'll see. I mean, I'm hopeful that GME breaks out. And like I said last week before, pretty confident this is going to go back up to about 32, and maybe even go as far as like 40, 45, because there's a potential here that it has a nice swing all the way up. If it can kind of 50-50 around 32, I think it's going to do it. That'll be the kind of the crux point right here. We haven't approached that yet. So if we hit this and we don't continue, I wouldn't be like shocked. I'd just be like, okay, you know. And likewise, if we did continue, I wouldn't be shocked. I would probably assume it's going to go up to 40 to 45 at that point, maybe the higher even, because at that point it's like really don't know why you'd stop at 40 instead of going all the way up and checking that major drive up. So there's a bit of a widening going on here that started back in this range, and we mentioned that sometimes in GME you get this double. This has happened before. You get like a double diamond, so it breaks down and then it breaks up. And we were talking about this range as, this is a little bit complicated because the way I'm measuring it's a little weird. It would be like, yeah, it would be right here, roughly. Yeah, I might have this a little off. It looks a little big, but let me try it again. I'm trying to think about where the bottom of that diamond breakdown would be. And I think it's still just this ice level. By diamond, I mean it's a widening, and it started widening on January 15th. And then it's not really a great narrowing, but I don't really worry too much if the numbers aren't like perfect. So I would have suggested this is pretty close to where it was going to be targeting, like 24.32. So what we look at then is that sometimes you get this kind of double break. Maybe even better just to go right back to liquid center here. That's actually more accurate. It's like getting kind of close between the two. And then that way we can do the opposite side. And then the opposite side target would be up here around 31. Again, same deal, kind of like giving it a little padding on either side. Really, it's like this $31 level. So that's what I would expect if that flush... if that flush, George Costanza, I like that. I think it moved. That would be what I would expect if the flush could follow through. Would be, again, about that 31 area. And I had marked that off for a number of reasons. One of them being that there's a drop-off ledge right here at 31 that we just didn't check. So there's a really good chance that we're going to hit that number, in my opinion. Beyond that, we talked about potential for further downside. And when I measured the S-curve, it really seemed like, and this is weird, you're not going to love this comparison if you're not a fan of AMD, but both of them have a S-curve that measures out a little bit lower. This one looks like it needed to come down to like 23.35 more accurately as a middle, but I don't know, maybe I'm missing something, because AMD was the same way. I did a different chart for that. I'll show you what I mean. And it's like, it's a really nice chart. It's really, by nice, I mean that it's very tight and concise. I don't mind if things are wrong, but I just like to make sure that I have a lot of data. And right now, AMD has one of the stronger arcs that I've seen. It's built upon actual trajectories, not like reverse trajectories, and it's pretty darn strong, and it's all pointing towards this pocket. You have to look at it on the 30-minute to see it right, but this pocket around 137, which again, drop-off level. Now this is really similar to what we just looked at GME, GameStop, because again, it's got like this kind of push down here that I measured 2 times, and I found 2 possibilities based on 2 S-curves. One's really large and one's kind of small. And the larger one would go as low as $101. Big reset for AMD. Albeit, there's a lot of things that we could talk about with Bollinger Bands and other stuff, how ridiculously oversold this got. But then the lower one actually was like 104.83, and neither got hit. And so what I'm noticing today, I'm bringing this up because what I'm noticing today is either this is just a bear trap for the market, and I'm talking about all stocks right now, okay, basically. Like a quick pump with a quick dump. So one of my concerns is that this is like a Monday pump, and we're actually not done dropping down, and we're going to see like a flush back down to these lows. And I'm looking at GME right now, and I'm kind of feeling the same way. Like, it looks really good because you're up 7.5%, 6%, It's like, oh, it's just going to run. It's just going to run. But then it left this kind of glaring gap behind on a support level. That's really odd. Like on the support level. It was like beneath it too, which is strange. And that doesn't make me feel good. Because if you were to go down to fill that gap, you're going to have to break that support. It's a very odd setup. Again, it could have been that was a bear trap, that there's targets in mind that won't be hit. We're just going to erase that hope and just kind of reverse early. And that does happen. Just like it happens to the upside, it can happen to the downside. But I got to be honest, every single one of these, AMC included, to some degree, had a potential to come down slightly lower, which is strange. And I feel like I don't want to overthink it. If we break out, we break out. So I'm going to just kind of keep it at that. If it breaks out, whatever, it's going. Okay, moonshot, you tell me. I think it's going to go where we've talked about, back up to 380 and maybe to 430 for AMC, for example. But like GME, same deal. I think very likely going to go up to 31 and then potentially up to like 45. And AMD, even though this isn't everybody's favorite, this is one I've been really watching a lot. Yeah, I think it's going to break all the way back out and go all the way back up to near 137 before it stops. And there's a lot of problems with what happened this morning, and that's why I'm like hesitant, because I'm like, well, I don't know. Everything kind of did the same thing, like universally. Like this is FANG. This is oil industry. This has nothing to do with entertainment in the sense that, you know, we're not in the same industry at all. FANG did the same thing. It's like almost everything on my chart, you know, NNOX did it. It filled its gap. ChargePoint did it. I did see a little bit on IWM and a little bit on the S&P, but like the IWM and S&P didn't have like big, massive, glaring gap zones. If I look at IWM, which is small caps, this morning, I would also be a little hesitant to say it's definitely going. It's again push resistance, but notice that last week it has this widening structure here. It's almost a widening top. Maybe it's a widening top. But the problem, I guess, being that if it does continue down, it's possibly going to go pretty low. Like we might be talking about back down below 220 on IWM. And it also made this kind of last minute Thursday push on the resistance and then drop back below. It's not below like the bigger creek. So again, if you were looking at this like helicopter view, I know there's a lot of lines on my chart, but the actual more official creek, it's technically on top of it right now. But you see how we're sandwiched on IWM here, which is the small cap ETF. You see how we're kind of sandwiched between that ice level, that rising parallel, and what would be a support right here at 224.81. That's an interesting spot to be in on a Monday. So again, it's like there's a feeling of bullishness in the air this Monday because there's a lot of green. And again, you don't want to be constantly like overthinking. Me personally, I'm talking about when I say we, but we don't want to be overthinking everything. Like, oh, it has to be this bad thing or something. No, I mean, it could be really just a bear trap that was designed to kind of make bears think it's going to go down and then it goes up. But we really won't know unless IWM comes over like 231, for example, because that would be more or less confirmation if it can push here and hold that support that it's going to continue. Unfortunately, based on where it is right now, a drop below kind of where we are, which is around 225, 60, I guess, and then dropping 224.75 would result in a pretty massive flush, more akin to what I had originally sort of drawn out, what I thought would happen. And I don't know, when we looked at it last week, I thought maybe that already happened. Technically, it came down pretty darn low. Didn't quite fill the gap, but who cares? It's an ETF. Maybe it doesn't need to. It's a flag, and this is a even atom bottom. We talked about how on an even atom bottom, once you break back up, you have sometimes like a flag or what they call like a handle, And if that handle breaks out, it breaks over the top, then you get the breakout. That's the confirmation. So it should potentially go pretty far, right? If it can break that handle, it may have a very simple kind of 50-50 in store, because typically that's what happens. So it could be as high as like, well, all-time highs, really. It'd be like right there. So basically it'd be going back to all-time highs, which makes sense. And that's kind of what we have in mind here. Now I have a little bit more of a bearish conservative path towards the top in this regard, because of what I think might happen later. Even though I think this market's bullish, I think we might have some consolidation on the top. You know, who knows? In the past, when we've broken up, we haven't been pushing all-time highs. So this would be like the first time we really are pushing all-time highs on the small cap ETF. So it's not since 2020, 21 rather, that rally. And it's been a while. So 4 years. So we really don't have, and we didn't break out there, right? We topped off and then we dropped. I guess it was technically like COVID, that rally that broke the all-time high previous to that, but maybe I'm wrong. Maybe it just takes off and it just goes. I have triangulation on this that suggests we don't hit 270s until about May. That seemed about right to me. Based on everything else we saw, made me wonder if this kind of is a front runner for a small cap rally in May, because we had talked about May and June being potential run-up times for both GME and AMC, and that's actually been the case for quite a while, even though we've kind of mixed, we've definitely mixed up how it gets there. I've been thinking it would come down low, and we may have more of a summer run. That's been on the chart for a long time, with this idea that March might be kind of a pop and drop period. So we'll see. You know, I'm not sure that that's exactly what's going to happen. Nobody can perfectly predict the market. But IWM is typically easier to read. It's a small cap ETF. Unfortunately, it's the Russell 2000. Unfortunately, AMC doesn't really follow it all the time. It kind of picks and chooses. And there have been rallies that AMC and GME participated in, and there's been other rallies that AMC and GME just did nothing, as you can tell, because this is like a history back to 2024 onward, last year. And we all know that, yeah, AMC had a big pop in the middle, but other than that, it was basically just flat. And that's the truth. It's basically just flat. We're sitting around $3, but if you look at where we were in January at like 5 or 6, it's not really gone anywhere. And most of the time has been spent between 4 and 5, that region. So aside from like one rally, right, we didn't really participate in the small cap rally that happened last year, and it's up overall. Now it's very volatile. There's an election in the middle of that. Maybe things smooth out a bit. I've heard some interesting points of view. I've been reading a lot more than I usually do, and about the market from just various people on the internet, mostly just analysts, financial analysts, whatever. And I try to be careful with that because, you know, you can get on there and find some ridiculous opinions that are really just random people who just graduated college and got put on some new site that formed up as a pundit or whatever. I mean, I'm not trying to be rude, but there's a difference between somebody like that and somebody who's been in the market for like 20, 30 years, who, even if you don't agree with all their stock picks or whatever, at least they've had the experience. I mean, it's a lot to digest, the stock market. So it's not like I'm disparaging young people when I say that. I'm just saying. I try to be really careful about who I pick when I read stuff, but I did see some interesting opinions about who would benefit the most from a Trump presidency. And as expected, there's a lot of agreement that small caps might be one of the bigger benefactors, as opposed to the larger, like S&P 500 group. Most people, I would say most analysts, tend to think that the S&P 500 is not going to continue to rally like it did last year, and that it will grow, but it'll be like much smaller growth, starting to kind of like ease up, because the rally that it had on a macro scale was huge, and it's going to need some time to cool. And also the AI boom, while that's been like really good, Nvidia's taken some really big hits. It doesn't take a lot to kind of convince people that this is not necessarily, it's not a Jenga tower, but it's not exactly built on a perfect foundation either. So at that point, people start getting nervous. And then when people start getting nervous, the market's already kind of correcting usually, or it already has, corrected, because we're usually a little bit late. So I would not be surprised if some of your bigger institutions are already kind of exiting those positions and repositioning in other things, for a new rally, right? Disbursement of those funds. So that's my general thought here going into the new year on IWM. And I don't necessarily think there's much else to look at. I mean, you could talk about downside. I've got a couple arrows here that talk about bigger breakdowns. It would have to break a macro trend in order to really see some significant breakdown to like 200. Otherwise, I don't think this is very complicated. I think it's a very simple trend, and as long as this holds, this is a really simple bottom structure. It's a really classic one, an Adam and Eve, or even Adam. So if it breaks out at 230, I do expect it to go back to 250 area. Pretty substantial run there, I think. So I'm going to be keeping my eye on this, because I do think it's possible this has a decent rally and pumps pretty far. And there's only a few other kind of bigger stocks that I've been watching that I think are potentials for good runners. I've talked about FANG. I don't really think this is going to be anybody's favorite on this channel based on what I know about what we've been exposed to in the meme stock trade. I don't think a lot of people are really interested in oil rig companies, but it is what it is. I mean, it's a good chart. I think it's a solid chart. It's had a really big correction. It's been kind of divergent for a while. As you can see, this is the 1 hour. RSI is kind of building out into a bottom here. It's really back down to a pretty historic support level. I just don't expect there to be much complication with it. I mean, it's not like some things like AMC where I'm constantly worried about them rug pulling or like somebody, diluting. Hey, will you spritz him if he's howling like that? You don't have to do it right this second, but if he's just going in that hallway. So that rally to me is not really that, it's kind of cookie cutter. There's a place that it needs to come back to. It's a 786 retracement back up to 175, for example. It's a good trade. It's an easy trade. I don't see this as a hugely risky trade either, and I think the same for AMD. I will say, though, that, again, like I'm looking at AMC and I'm thinking about all these other stocks right now, because AMC and GME both have that similar look where they're kind of coming back up. They're not quite there yet, right? Both of them could be considered like an auto reaction of sorts to that kind of sell-off that we had late last week. And AMC really just kind of chopped from Tuesday all the way to Friday. And I was talking about it on the Discord group. Speaking of Discord, I forgot to share the link. I should probably do that. Hang on. I was talking about it in the Discord group, and I was like, what is this? This is some goofy poo. Let's put it that way. Children in the room. I was like, this is some garbage. And I'm not normally like a big proponent of using words like I don't like the short ladder attack thing is real, but in order for you to see it, you have to kind of like be in the moment, like watch it pinging back and forth. I'm not saying that that's what's happening here, but it just reminded me of something like that. And especially if you look at the kind of the mechanical nature of this that happened first, it looks iterative to me, and it looks like a change of character, which is good. because it looks like, again, you have this really consistent chop down with a drop that makes a new low, and then a pop, and then you have a really consistent drop down chop with a drop. But this one doesn't make a new low, and instead it goes the other way. And it's doing so over the big picture creek. So maybe unlike the others, which I'd be a little bit more concerned about, I'm not as concerned about AMC if it can make the rally, because I do think it's going to come back down anyways. So like if it comes back down to $3 in the future, I wouldn't be like, oh no. I'd just be like, okay, well, that was kind of what I expected. The rally here into earnings and then drop. That's my projection. If it doesn't happen, it doesn't happen. But we know where the levels are that it needs to break out. So I'm looking at this right now. I'm like, yeah, I guess it wouldn't be the end of the world if it just left the gap there and just took off. And technically, it's outside of its creek, guys. I mean, it's a big deal. And this is what I was saying was kind of goofy on, like AMC broke out. I don't know if people are sleeping on it or what, but it's out. Like, it's done. It left its major downtrend here. Like, that's why you're getting kind of a pickup in buying volume, I think. I'm not really concerned about it going back through that creek. I'm more concerned about it just coming back down again, as in it's not quite done or it builds out a range. And that's the only real major concern I have on the outside of the creek. So let me put it in like a really basic setup here. You know me, I like to draw little doodles and see if I can figure out a better way to show this. Man, this Discord thing is going crazy. I'm never gonna get them to. I'm never gonna get to share it at this rate. It's like doing some install or something. All right, so like for example, let's say we don't really have a perfect wedge, but it's kind of like one. And I think we're seeing again that this is a fairly iterative model. Like there's a cat ear kind of structure. It's an S-curve. There's another one here, but it's really like more straight and linear than this one. And then there's a last one. There's like 3 in a row, where it's like pushing down in a very, well, I would say more mechanical way. And every time it's making a new low until here, and then it jumps the creek. So now when we talk about iteration, we talk about that idea of repetition. Remember, an iteration is within a larger structure. It's not by itself. It's not a mutually exclusive kind of thing where it's like one after the next after the next. It would be disingenuous to say that. So when we talk about iteration with like cat ears, for example, this structure is the structure, but it's got the second ear, so to speak, is made up of 2 ears, right, of the same structure. That's the idea of fractal iteration. I don't know why people don't look at that kind of stuff more regularly, because it's literally the definition of a fractal is that it iterates within itself. So people that use the term fractals and don't talk about iteration, I don't know where they are coming from, because that's literally what the word means. I think they're talking about bars patterns, which isn't quite the same thing. So that's different. So like when I talk about that, I'm saying that what we need to see is we need to see this consolidation break out, this downward, we'll call it iteration actually, I should use the word consolidation. It broke out here, it didn't make a lower low. That's fine, but even if that happens, you can't really like, at that point, you can't really guarantee that it's just going to immediately go back up to whatever the target is. So if it were like a wedge, for example, you would look at this and say, yeah, it's probably going to have a 62% retracement if it breaks out here and head back towards near the top. And we usually find that there's a pretty concise, for example, in this little diagram, there's usually a pretty obvious like ledge that it dropped off of, and that usually ends up marking off the 618 or whatever the target is. So you might say like, oh, it's going to go right back to it. That's not necessarily true, because as we all know, even if that's the case, there are plenty of instances where there's something called a throwback. Throwback is where it basically comes back down. So like that would be like this example that I just doodled here, where like it goes back down and it double bottoms, If that were the case, it could come back down to like the particular low it did before, which means that the breakout level has now been shifted down to the bottom. You wouldn't use the top where it actually broke out. There's other times where we've seen that this is building out a range. This is more of an auto reaction, and then the secondary reaction may be like a phase B top, in which case you're kind of left wondering like, well, what could happen then? Well, technically this could build out like a longer range here where it stopped. Now, does that change the ultimate target? Yeah, if it makes a lower low and then goes, it could change the target, sometimes for the better, sometimes for the worse. It really just depends on how the range sets up. Bukowski's methodology is very mathematical and statistical. He talks about what he calls like a pushback below like the previous bottom, and he talks about double reversals and double reversals. So one would be like a reversal would be like a flush up that's too high that comes back down below this marker. We've seen that before. It's like not fun, right? Where it drops back below and then it usually just craps out, or it has some serious volatility that maybe brings it back up, but it's not great, right? And that can really affect the target of the price. And then another one would be, a different example would be something like this, which is it's still outside that creek and it may be forming a range, in which case you're really just looking at like, what did it do after it pushed out? Because that would be the first move. Then the second move would be like we're jumping and going back down, retracing, building our footing, and you have something more like this. And that could be very bullish. So I didn't leave it on the chart. I don't know why, but it was here last week. We talked about how it's possible that this could be very frustrating for us because it's possible that this doesn't actually just go. That this level, especially right here around 330 to 320, even if it makes a higher high here, and let's say it pushes up even just a penny above or whatever, that could be kind of meh for us, you know. And we would expect there to be a 1, 2, 3, 4 regardless. 1, 2, 3, 4 could be done. 1, 2, 3, 4, or it could be 1, 2. This is all 1, 2, 3, 4. All is 1, 2, and then there's a 3, a 4. So there's certainly a possibility of coming back down to fill the gap before we go. That's kind of what I'm trying to get at. And there's certainly a possibility that this could inadvertently then potentially form like a larger range. And one of the things I was thinking about last week is if this doesn't break out and it just pushes up and out away from the creek, which is great, I'm glad we broke it, that we did make a slightly lower low right here. And this was, I don't know if you can see that. This was not like on the big picture a lower low, but notice that we found support. There's really two spots. I should leave that one where it is. That one's good. That's the 308 level. We talked about it coming down to 308 end of the week, and it did. So I'm glad that I called that right. And actually broke out and came back down to 308 on Friday, which meant that Monday was probably going to be green. I think I mentioned that on Thursday, that it looked like it would be positive. It did something like that. But here is my thought. Like, I'm not really sure what to make of this. It could have been, again, what we call like a spring, which is where it's pushing through low liquidity and testing the waters, and it's not able to push down. But a lot of times when you check that liquidity, it depends on like where it is in the schematic. When you check the liquidity pretty early, I get a little nervous if it's early in like kind of a range setup, because that makes me wonder if this is just pushing up in order to find sellers. They know it's going to break out and find a lot of buyers, and it's an opportunity for them to sell into FOMO. Oh, it's broken out, it's going to go, right? Really, it hasn't. It has on the creek level, but it hasn't here. Well, which is it, Booksy? I don't know. You really don't know until you see that quote-unquote smart money buy-in above 325, which is the key. And if you don't see that, and you come up here and you're kind of exhausting a lot of indicators, and you're pushing up towards 320s, and it's just kind of weak looking, especially if you get some kind of divergence, just watch out, because I think this marks off potential for the future for like a phase B, depending on how high the second thing goes. A phase B bottom. That in itself could last the rest of the week, and I don't really like that, but it is what it is. So I would not be surprised if, again, and there's a 4-day weekend coming up, it looks like, by February 14th, we're really just sitting here. Oh, but February 14th, that was the pivot. Yeah. But remember, the pivots are tricky, man. They're either indicating to you, and I think it's very true, I think they either indicate a potential bull. I mean, it really is what it is. It's a bull target, but it could be a pivot on a wave. And I think we did this right. I believe I used not sure where this came from, actually. This is 58 degrees. It doesn't match any of these. It probably was from here to the top, and I just deleted it. It's from the top to the bottom. This is what this should be. This should be a trajectory out, and I'm pretty sure that's what this is. So I'm going to leave it. It's a trajectory out. So this is roughly that trajectory out from whenever you start from the bottom. But you could technically start there on the 14th, and earnings is over here on the 28th or whatever. You could be halfway up the tree by then, trying to work your way towards the top, and then pop after earnings. And that's kind of what we had here a Tuesday. So it would not surprise me if there's some kind of garbage down here, and we really don't rally until next week, for AMC in particular, okay? I'm not talking about other things necessarily. And we really don't rally until that point, and then we see a big explosion maybe after that. I would prefer to go now, so we can go ahead and build out supports. But I'm also wondering if it's bearish, if they really care about that. We just have like a massive week and a few days rally that leads into, this would probably be some kind of dump if it happens this way. And then Wednesday, you just like take off going into Thursday, Friday, or whatever. Wednesday, Thursday would be big, and then like after a dump, and then it would dump back into Friday, probably down to 4. That seems reasonable to me. So yeah, this wouldn't surprise me at all if you get kind of a rally into it and then it drops really hard on earnings, just on account of it being earnings, and then rallies again the next day into a distributive top next day or two. So that being said, this idea of like, oh, it's going to go right now, I can't be positive about that until we get above this target here. This is kind of the early move, and if it doesn't happen, then I think it's pretty likely this is going to come back down and try to make what we would call like a spring, maybe going into Friday. Good news is, if it happens in this way, we're outside the creek, and if we get that completed setup, I think we're going to be in really good shape. It is good news. Does this be like an auto reaction with a phase B top? I think we're in really good shape to potentially go, especially if we see this iterate down into Friday and we get a really clean M-cross setup. This is going to be super bullish going into next week. You've said that before. Yeah, but it doesn't happen, right? So I'm saying if it does happen, I'll put my money where my mouth is, right? Because if it does happen, then this is going to be a big buy-in on Friday. It's kind of like what happened back in May, albeit I don't think it's going to be as extreme of an upside move. I think it'll be pretty good rally. I think Tuesday, and actually we can probably start predicting what that would look like, because if it doesn't, right now it hasn't even made a higher high, but if it doesn't make a higher high, that's okay. This right here is already a new creek because it's pushed out now. This kind of gives you a sense of like, all right, that's right where the SOS needs to be over here. So that's a good thing, because it's setting up in a way that would be conducive to a big rally potentially next Tuesday. Another week. Hey man, I got March 7th. I'm not looking at something that I knew it was going to be a while, and I figured there'd be some shenanigans. So going into earnings, so I'm being pretty optimistic here, saying that I think it could go up before then. Yeah, I am being pretty optimistic here. So that it's going to rally. I mean, I don't know if this idea of rallying into a Friday even makes sense, but maybe it'll be at like 350 on Friday or something, 360. And then have one more kind of push up going into Tuesday, but be more crappy looking, and then drop. Big retracement here. There'd probably be some reason, there'd have to be some kind of reason that there's a major retracement to this level. So that might be, I know I'm making kind of jump conclusions here about why that would go there, but it's more based on that trajectory business, and that doesn't really make a huge dent, could be either one. I just think it's going to be clean, so that's why I have that. But yeah, let me take a look real quick. Maybe there's a... So if I'm right about this, then what we're really doing is not just making lines up in a vacuum with pumps that are just based on earnings and only earnings. We're really doing something else mechanically. I bet it's over here. There should be a reason, yeah, that this stops there. And there it is. Right there. It's perfect. Yep. So there's a jump, and then this is the distribution that happens. I would suggest that that's exactly where it's supposed to be, right there. How did I do that? I don't know. I don't know, man. At this point, it's like cookie cutter. Yeah, we're taking care of business. This guy doesn't know. Has anyone here made money? Yeah. But, I mean, I can't speak for other people, but I've been doing very well. Very, very well. I don't know what you guys are... I don't know what he's talking about, but... Hey, man, if I'm not a good source of information for you, please go ahead and unsub and peace out. I don't really need to deal with that kind of stuff. Like, it's really simple for me. Just speak with your actions. Like, I'd support that as opposed to like someone being in here trying to tear down something, tear down other people. I've done very well the last month. I made an income. I made a salary level amount of money for last month. So I'm not, and that was 3 weeks of trading. So I'm not really going to sit here and like brag about that anymore. I think that's silly, but it's not my responsibility to trade for you. So like I've done very well, and I've posted my losses and my wins on the Discord group. I haven't traded AMC. So if you're wondering like, well, it hasn't gone up, Booksy, you were saying this and this and this. I haven't traded it until recently. And I told you guys I bought March 7th, 4 5s, because I think it's going to be right here. And it's going to come back up and check it. And my guess is that the people that think that's not going to happen won't come back. Even if that happens. That's usually the case. They'll come back 6 months from now and start talking about the same things again. This guy doesn't know what he's talking about. I'm not going to go back through every single time that I've gotten it right. I don't really care at this point. It just doesn't make any sense to me. But anyways, yeah, prove it, man. Prove it. You gotta prove it. No, I don't. If that's your next response, show me your account. Then I'm already giving you my response. I'm not gonna do that. I don't have to prove it to you or anybody. And you guys don't have to prove it to me or anybody. The only people that care about the income that you make are you and your loved ones that it affects. That's it. Everybody else in this like other world out there that you don't know their face and all this stuff, they don't matter in regards to what you make. You trade what you need to trade and you get it done. And I've been very, very transparent. I exited a lot of positions back here on AMC for a loss after it broke through that creek again. Did not like it. Said it was bad. Said there was only one chance of recovery. It was right here. Didn't happen. Period. Done. That's it. It's going down. That was the end of it. I mean, it's not complicated. At that point, I'm not entering a trade until it looks good again. And I think this setup looks potentially very good. So I'm re-entering a trade. But I'm not trading through here, guys. This doesn't make any sense to me. This is all like not predestined, but like once it lost, it's like that doesn't make any sense. Like right here, we talked about this. When it came back through, I said it looked bad. And then the same thing right here. This is not a negotiable thing. If it cannot make a new high after this kind of a dip right here, then it's weakness. And that means it's going to go low. That's it. So those are the stop loss places. Those are the places that you're like, that's it. I got to pull the plug. And you do it. So I've not traded for the last like, I don't know, month and a few days on... I know that, Eric, but I'm just saying, like, there's no, in regard to the TA, there was no trade here unless you're going to trade to the downside. So for those that only want to look at AMC, if you're in a long position, that's different. You're just kind of watching for the TA. For those that are like actively trading the market, there's no trades here unless you're trading down. There's just nothing. This is maybe the only one. When it did that big reaction because of that drop, I mean, it reacted appropriately. It just wasn't like, at that point, you're like, all right, this is the bigger problem that we had on this stream, was that right here, you get an influx of people when it's going up. After it makes a few green days, you get a lot of people coming in saying it's going up, it's going to break out. That's not good because it hadn't even jumped the creek yet. And this is the irony of being on a platform like this, is that the patience required for the trade means that you got to be here when it's kind of nasty. What most of the comments have been, and I did a full streaming day on AMC last week, and most of the comments have been very negative, like it's dead, it's not going anywhere, this and that. Those are things that, hey, what's up, Maelstrom? It's been a long time. Those are the things, really long time. I'm glad to see you. Those are the things that, it's interesting to me because I'm like, this is kind of where you want to be paying attention. When it's like down here right above the gap and it's pushing out along a creek, this is where you have a potential major reaction in play going up into an earnings. Back here, after that dilution announcement, you're kind of grasping at straws, hoping that it doesn't continue the bearish pattern. And it's possible that it didn't. But I don't know how many times I've said 440 going down was a huge blow. This move right here. The loss of 440 was a huge, huge blow for us because of this pocket. This is a big deal. So... yeah, when we look at this, I'm not particularly concerned about upside right now, but I think it's good to hash it out and just make sure that folks that are watching are aware of what it is and what it isn't. I think it's okay to have that discussion every now and then. I know that 90% of you that come in here are pretty level-headed, and that oftentimes the noisy group tends to take the most take some time away, I suppose. Yeah, I think that's the move right here, back to 450. So, anyways, I'm hearing you guys. I know what you're saying. This to me is a fairly simple no-brainer. So this was set up by a trend earlier. This is it's a bear trend, but it's a directional movement for resistance. I don't know if this came from something previously, like a long time ago. Maybe it did. Maybe it's like a fan. So you took like fib fans from like the very top. This could be one of those areas that's kind of respecting those. It kind of looks like it's pointing back towards the May top. Not positive about that. But I do know that anytime you generate like an S-curve, which is what this is, right? Where you've got kind of a midway break, and then you're kind of forming out what is trying to turn around here. We've seen it in the indicators for a while. But anytime you do that, those are very important levels, just like they are on tops. Maybe I don't talk about that enough. On a top, it looks like the quote-unquote kitty cat ears that we talk about. That level is so significant. I can't tell you how significant that is. I can't begin to describe it. When we did our examination last week on AMC, we're still heavily interacting with the cat ears that were made in June, the June run-up in 2021, 4 years ago. That particular angle on a distribution is so important. And we talk about it in terms of the waves, because oftentimes that becomes like a middle. I don't know, it's not perfect, but usually ends up being like the middle of like the next wave here when we talk about a sine wave. Again, why? Maybe we see these things nowadays because of the mechanical nature of trading. With algorithmic trading, there's a lot more consistency. But even back in the day, this is just a Wyckoff distribution. Even back in the day, this pattern was apparent to a lot of people. It's just a trading pattern based on liquidity and how the liquidity grab is going from an institutional standpoint. That marker right there, though, is so significant. And when we looked at it on the macro, that's what this is right here, by the way. We're literally looking at it right now. This right here, this red line, that's the one that comes from June. Like, that's what that is. I have it on the chart still from that analysis we did. It's that close to where we are right now. And we're still interacting with it. We're still walking across it. So it's very, very important. What we don't talk about as much, and I'm doing it right here, I'm kind of doing it without telling you why I'm doing it. This is the same exact thing, but it's built upon the precipice of like an S-curve. In which case, this would be like a top on a wave, right? That's fairly distributive. And in our case, it's very much like a latent kind of push up, like this kind of business, where it's like a heavy triple top kind of dump. And then you're getting what I call like an S-curve in the middle, okay? And it's the same thing. I did just adjust it like on the fly, but you can see like that's exactly what I'm talking about right here. It's the same thing in principle. So this ends up being like a midway point, and it almost always indicates some kind of a significant breakout level. If you're going to continue to distribute, I don't want to be like a Debbie Downer about it, but if you're going to continue to distribute, this is what I've seen with this pattern, is that sometimes this can form out like a larger, like a new, let's call it like a new wave, not like new wave bossa nova. But this can form out like a larger reaction that goes back to a trend top like that, as opposed to, does that make sense? So like sometimes this is actually building on a larger trend, and that's kind of what we got here in theory, because if we took this and we brought it up to the top, what we would find is that this particular trend is intersecting in this pocket region right here around 430, which is what I've been saying, near the 430s. So it's not guaranteed to be like a flag, but it's like the beginnings of one. The beginnings of a flag, I guess, is the best way to put it. And it's interesting because now looking at this, I'm looking back. This goes back to that earliest jump from like back here. This is like the first big creek jump right here, the first M. So this all then becomes like a setup for potential, like this whole motion. And this is the basis, guys, of like pitchforks, by the way, is that the trend, let's call it the angle of ascension, right? Or you could even use pitch fans, that the pitchfork, hence the name pitch, the pitch is the angle of ascension here, often determines the direction you go later. And that's because, and what I'm talking about is what we're seeing ingrained in that, which is this tendency for directional input to start appearing here in the midst of the upside or the downside if it's going to go the other way. And we see that consistently right here. So this particular angle that I'm looking at, maybe it's not a midway point. I can't be 100% sure about that, but it probably is. So like here, this would be like the middle of a wave, right? If the wave is going to distribute, it would more than likely stop right there. Now, because of the trajectory down, the motion down here, the trajectory out here, and the fact that we have earnings, I'm making a chart that I think describes what is most likely to happen, in my opinion. Albeit, could it be over here? Sure, it'd be a much weaker wave. But if we put it right on the bottom, it suggests to us that we intersect right on Tuesday the 25th. We hit the top at $4.30. That's from the bottom. So this isn't perfect science, but it's really pretty tight. It's really all we're doing is we're generating waves. Like, it's super simple. If you want to look at it like that, then all this other stuff is really just informing my opinion about it. And that's all there is to it. You'd be looking at something like this. This is the wave right here. And what we're describing is we're describing what we think is the bottom of essentially like the bottom of a channel. So we're not using like the tippy top, right? Because that's way up here. It looks a little odd. We may not want to use the tippy top here either. We may want to use a different point of interest, but that's essentially the wave that we're producing right now. So the theory of like, this is why this goes up here isn't just because there's a gap, although there is a gap. That's nice, right? It's a little checkbox. It's not just because there's a ledge that's unchecked, even though there is. There's a liquidity level at $4 that we didn't really back test when we came down. We only came up to 377. We didn't back test a lot of this stuff, but that would be enough, I think, for most traders to look at this and just say, well, that's an area we need to come back and check. Okay. Well, look what I'm doodling here. It's a wave, This is where it broke down on the right here in the middle. We could also do that. This is the double bottom. Remember that? And we started to the upside. This would suggest that you're going to come back no later than March 6th. Hence why I got March 7th calls. Because I think you're probably going to be up there before then. But at earliest, you could even hit this potentially like this week on the 13th. So this window is really just based on what's probable for upside. And if all your other indicators are kind of giving you indication, yeah, that's true, this is building out upward, then yeah, you should be right. We're looking for as much data as we can, especially for something like AMC, which tends to be kind of garbage, with its indicators, but I mean, it just is. It has moments where it's like really nice, and then other moments where it's like, yeah, there's no way you could know exactly when this is going to stop. It just does. And you have to kind of look at different time frames and see what's right. I think this is fairly straightforward, though. That's why I'm like liking this as a trade, because I don't see this as very risky to me. I don't see it as inevitable, but I don't see it as like highly risky. I think there's a possibility this goes up a bit higher. We've talked about that on an extension, but I think largely where I've got this is actually pretty darn close to right. That this should be underneath there. And there may be, if we've done this right, there may be a way to do even a cross section here. which I've not done yet. I don't really want to gunk up the chart more, but I guess I can get rid of some stuff. Yeah, possibly. I don't know. I don't want to get rid of anything right there. I'll get rid of this one, I guess. No, that's probably it. It's really low. But it's another one. And this one's actually really good because it would be very likely that this is the center based on the intersection right here, that this is the low middle. So one thing that you find in these waves is that if you go back and you look at them retroactively, there's usually a lot of intersection or pivots from a circular standpoint on the wave near the center. It doesn't have to be right on center, but it's usually pretty close. We've done this a number of times proactively, like looking forward, but just in case you're wondering, like there's often like a lot of connection between where that is and where the center is, and it may even be lower. If you use these two marks up front, it might have been that first drop. I'm kind of using a bit of both, but this is a bit tricky. Yeah, I don't know about gaps because sometimes it's like the middle of the gap. This one looks pretty close, and I think this is the middle of the gap right here at 405. That's our target level. I've kind of said that repeatedly, that it's probably going to go up a little bit above there, but overall, that's kind of where we've been talking about it coming back to anyways. I said 390 is the lower kind of and then 430 is the upper kind of Like maybe it goes a little below, maybe it goes a little above. Might do both. Sort of what I'm expecting here is that it's going to do both and have a bit of a double flush. To show me later, okay. That's super cool. So when I look at this, I want to make sure that keeping that in mind. And that's why I've got the distribution across 4 when we did the little schematic. Looking at it now, I'm wondering about this guy. I'm wondering if this is going to be even weaker and maybe define a new creek. Because what you can't see is you can't see that this is actually a bigger creek here. And I wonder if this, because it's a new parallel, is actually showing us how it's going to push the creek a little bit and then define, or redefine, I should say, where the outer wall is right there. Yeah, and it's going to go above it and hold, or it's not, and it's going to look bad, and it's going to drop back down. And no matter what happens, when this does go, I don't know exactly when exactly. It could be right now. It could be next Monday or Tuesday, rather. When this goes, this will be a trend that will be tested and probably broken at the end. I think no matter what, whether it goes up or down, I think it's going to break below that here. Because that's what the cat ear is. It's literally like a wave down and up that rejects the trend. So there's not a lot of mystery about it, is what I'm trying to say. It is as it looks. I think there's a route here that could be very bullish, and then there's a route here that's kind of bearish. So we will see which is taken. Actually, I kind of like this better for the bull side. I think it'll be a lot more up than back down during that time period. Because that's an SOS here locally. That's what it should look like if it's going to go. A consolidation and then go. And that's how you could potentially get a much bigger run out of this if it does go. I don't think that's going to happen. There's just a lot of negative setup here for this downside. So I'm nervous too about this. I don't really know what to make of this. I wonder if we get sandwiched even lower. I've got it coming up pretty high. I wonder if we get sandwiched here during earnings instead. I know 380, 390 might be a problem, but I wonder if we breach just above it at like 380 and then we retreat going into earnings right here. Like we stay low. And then we have one more push and it goes up to like 425, 430. That seems right to me. And then the rest of this is like hopium, that it's not going to do something bad. I would not be surprised if there's another dilution announced at $4, like out here in March somewhere. But at that point, I'm long gone out of the move anyways. I'm anticipating getting out before then. So I don't know if exactly this is what it's going to exactly look like. I think it's pretty darn close, and as close as I think anyone's going to get. I got to just say that. You got to just be confident in your own work. Y'all are like, no, someone else is going to be perfect. All right. That to me looks right. It's a 50% retracement on the downward move. It's got the correct location for the long wave. That's a new trend here. I don't know. It looks pretty solid. It has the intersections for the cat ears, compression bottom and top. The one that was established in the final M cross on the top here, going down. The one that was established back here as the bottom. It's got the parallels where they should be. The parallels are shared. It's pretty darn close to where that low is. We think the middle. The overall structure, wave to wave, looks about right. If this is the bottom, then the top should be, well, I mean, this is hard to do because the waves are tricky like that, but the top should be somewhere over here. That's the only thing right now that's making me a little bit nervous. Is it kind of looks like the wave top would be really weak if it's bearish. As in, it wouldn't necessarily... How could it do it without doing it, though? It's got to do it. Let me check one more thing real quick. I think I already know the answer to this, but... This is where the widening started. So I'm doing a 50% chop right here from back here on this widening structure. I'm not using the bottom. I know the bottom's there. So this indicates that you would intersect, yeah, really soon. Right here by March 20th. I know it's a lot of lines, but that would be the one that I would think most likely, because the 50% on average, if you cut it, the 50% on average tends to be right. And unfortunately, the only other way to look at this is like completely sideways, because we only have one other point. And if you look at it, the next point, it's not really participating in that parallel structure that's been built, which is the outward motion starting here on October 17th, because that's after it jumped the creek. It starts a new motion outward. If you look at the previous one, it's really just flat, and you would just expect to intersect by March 10th or whatever. Again, on average, that'd be pretty close to where you'd expect it to be. With earnings right here, it seems very likely to me that that is what happens, like somewhere in between the two, in this little top region. So yeah, at this point, I'm not particularly worried about my assessment here. I think this is very likely for a lot of reasons. And most of them aren't going to make people happy. The real reason I think you'd come up here is to redistribute. Worst case scenario I've talked about is this 390, and I still think this is kind of a problem area for us. We may camp on top of it. It's possible we reject and come lower. I don't know, man. I think it's going to be a mixed bag for us because I'm worried about that 390. It may be like, oh, it looks really bad at 390 and then it still pumps anyways to like 430, but you're like really worried about 390 because it looks ugly. That wouldn't surprise me. The type of setup here right now is definitely generating a lot of, this would be below it as like a 50-50 mark on the breakdown. You see how like when you find the right ones, it almost always works. See how that's like a perfect halfway point from like 4 to 350 down to 3 again. You guys are like, well, yeah, no duh. But notice that like by the time this particular intersection's here, which is the cross trend from the wave, the one that splits the difference, and that was used previously, you can see as support and then resistance. Now it's established as a trend line, right? Now if it's used over here, it's perfectly right between the two, ends up being used, which is why I think a lot of times we get the math right even when we're not completely right. We kind of know those areas are going to be important. 350 is obviously a very simple one because it's one of those integers. It's like, sure, all the 50% markers are going to be marked off and most people are going to trade those. That would probably be the aim here, right? Is to get down to that point and trade across that 350 zone, which makes sense because we didn't trade that. And we talked about that previously here, that we didn't trade that middle, which was around 350. So when we're coming down, we're kind of directing the motion of the market towards that area, but we're not going to go like straight there in a straight line, right? What do you do when you trade? You go down and back up and down and back up through that area. So it makes perfect sense then that if that's the direction that we're heading, that we're going to come up above and then back down through it again. And that's how we trade through 350s, is making passes through it. It is kind of the science of it, right? It makes sense to me. Now, from that point forward, what about this other stuff about going like super low? We don't know yet. We don't know yet if that's going to be the case. We don't know if we're going to do that or if we're going to build out something different. We've talked about on the bigger picture, seeing some of those indications that we probably come down pretty low. And there's definitely evidences that suggest you need to come back and hit this marker one last time. The fact that that's intersecting where it should is very interesting down here. We're closer to May. I don't think that that's a coincidence. I think there's a stronger probability that it happens because of that. But it's not impossible, to see this do something different or unexpected. We really don't know yet. I'll be very curious if we come down here and we make a slightly lower low and we hit like the gap. I would be really interested to see what happens if we come up again, because it's very possible to do something a little bit different and form like another distribution down. I think that would throw a lot of people off because you'd expect that to be like a spring and just take off. I wouldn't surprise me though, because I feel like at this point it may be necessary to kick away from this wave more officially, and that would work because this is where you'd hit it again. If you hit it on like a weakness, ooh, yeah, that'd be kind of nasty. The more of a surefire rejection, right? So there might be another trade there at the bottom again, off the gap, one more time. So my hesitation this week is more about the timing of this as opposed to it being bullish or bearish. I think it's bullish right now, and unless it changes, I think it's bullish. So it would have to have a change at this point. I'm waiting to see. I don't know for sure. I'm waiting to see what happens going into Friday. Jason, integers are whole numbers. Yeah, you know what I meant though. You're totally right. Do you even math, Booksy? Will AMC ever see 40? If so, when? Yeah, by February 2026. I think we're going to be breaking out, heading that way, or already there. DS. Yeah. It's very possible. I think we're going to go below the floor. But, I mean, I'm not trying to be a broken. I really am not. I hate that I repeat myself a lot on here, but this is not particularly unusual for us. When we were talking about going up to eights back here, it didn't happen, period. You know, that I was wrong about that. I don't give you that much because it definitely didn't happen, right? And I said that if it doesn't go up, I'm just going to say I'm wrong, period. I was wrong about it. The idea there was that there would be a second distribution though. So not to confuse people, but like that's where I was saying like if it did happen, it wouldn't exactly have been bullish. It would have been a move to like 860s right here, which would have interacted with some major creeks. We did interact with those creeks, by the way. We just did it way, way, way lower over here instead of doing it right there. And the only place we saw it happen was MPW, which was a fairly similar one-to-one setup, but it didn't happen here for AMC. So when we didn't make that move, I think there was a lot there that I probably should have just, looking back, I'm like, I need to start being more definitive. Because I remember the 520 move being bad and just thinking like other things could happen. And I don't know, it really wasn't that complicated. When it didn't push over 520, it really failed to make the jump. It's that simple. And that would have been the setup for what is now what we mapped out on last week, which is the iteration that followed, which are these push up, dump, rebound, push up, dump, rebound, push up, dump, rebound. And they're doing like the same thing over and over again. And what you wanted is that push up to jump the creek. Then you would have had an outward iteration that's rising instead of falling. Expansion, I should say. Not necessarily iterative in the sense that we would imagine it as shrinking, but as expanding. So the idea was that we would push up, and the reason that number was so attractive to me was that we would then drop back down and it would be a gap fill. And after that point, you would basically just see like kind of a repeat of, and I thought it would come back up here, and you'd see like a repeat of 2021 or whatever it was, that run up, end of 2020. That's not what happened. And what's interesting is that even later, I was trying to sort of figure out if that was the same move. And that's where I think some of the bulls got this wrong because they're thinking it's the same move, blah, 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 blah. I changed my mind about it when I saw that breakdown because I realized that it hadn't actually, I mean, I didn't realize it, I already knew it, but it was more of like okay, you have to just kind of take it as a range. And as a range, this never left the range. It just chopped along the bottom like an LSPY would. It did change character here by having the double bottom and trying to advance all the way back to the top, which is why it looked like this. And it's a similar timing. The problem is that it does this all within the range, and that's not what happened in 2020. 2020, you dropped the range, you hit the gap, you came back up, and you tested the bottom of the range. We haven't done that yet. And so that's where I see it as like, no, I don't think that's happened. I think that's happening now. And I think you have to make that back test on that upper 50% because the point of coming down there in 2020 is the same as it is now. You didn't trade across this region from about 350 up to about 430. Like this pocket region that we keep talking about is just this area that we just have not traded very much. We didn't trade it going down through here last year. Now we're back in this area. Now is the opportunity to trade around it. So all of these things look like they're kind of just willy-nilly setups. But when you drop that little pocket in there, the liquidity pocket, it's like, oh, now it suddenly looks correct. I mean, it is in that sense because it's like that's exactly where you would want to trade. Now everything kind of makes sense in regards to the liquidity. Oh, we're going to trade up, find a bottom there, but then reject off the top, and then find a bottom there again, and then fall back through the bottom. I did all of that without the liquidity range on the page here. You add it right back and you're like, oh, it's right where it should be. This directive down is positioning you through that liquidity range on a wave while compressing you against the creek for a moment later where you could have a breakout or you could have a breakdown. And that likewise happening here would be a breakout of that range to leave the range and go up. And a breakout here would have to be, again, finding support on the bottom of that range and then leaving out. All of that lining up with what we see as creeks. This is why I don't think it's necessarily predetermined, because I think there's a difference in what we would call like predestination in this sense. Like, oh, it's where they're definitely going to go. Well, yeah, maybe, but we don't know what the liquidity need is. So there's a lurking variable there, like, what do they want to do? If my thought is, and my thought is this, if my thought is that they're really doing this to trade it, but they're ultimately not going to go up after, they're going to go down, then I think the goal would be to get back down to this major creek from 2021 on, and trade the lows. Again, same deal, like a wave up, wave across, wave back down on top of it. That is strong though, because anytime you're landing back on top of the creek like that after jumping it, you have a chance for a potential big reaction. And then at that point, what do we need to trade? After you hit like a $1.80, if that's the spring or whatever it is, $1.74, I don't know exactly yet. But it's down in this region. After you hit that, where is there to go? Well, if you're stock father or somebody who's more bearish about it, you're probably going to think it's going to reject at 2 and just head low and start a new range down here. Frankly, it's going to trade down to $1 because there's nowhere else for it to go. If it drops through this and it rejects, then much like previously when we've dropped through it, like one example would be on the reverse split date, which was literally like right through the center. You're probably going to trade below it, just like you're doing right here on this like little wave in the present time frame, until you come back above and find support on top. I don't necessarily think that's going to happen, but I think if you hold there, instead making a spring action and head back up, you don't have to trade anywhere from, as long as the liquidity's surefire, you don't have to trade anywhere from 270 probably all the way up to 6. How do you get those big melt ups like you did in 2020? You trade the range previous to that. So that's why from like this $2 level all the way up to like 6, I have like a straight line, because that's what it would look like, because you wouldn't need to trade any of that. All of that short covering would happen. You just pass through it. And if you don't believe that's what happens, you can go back and you can look at any range markup anywhere and notice what liquidity they skip. They always skip liquidity that's already been largely traded. And you can usually tell by the chop in the range. And this happened again in 2020. This was traded previously. There's a minor little check on it before leaving. The lower end was traded pretty well over the series of 1, 2, 3, 4, 5 bottoms. This higher liquidity was traded here. There's also some chop right there. And then this upper liquidity was traded here. And then that's where we have the backup. All of these are not inconspicuous random points. You know, they're there because it's exactly where you went, boom, 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 on the way out. These were the trading ranges that were passed through and tested and whatever. Now, you could argue that the lower end of the trading range here didn't really get that much attention. Hence why I think we're trading right there really now, quite religiously even. Like, this is where the chart shift value is. If you look at the valuation, we're really trading right here in this pocket most of the time. I mean, it's pretty amazing, right? So now we're doing the same kind of idea, and this was, again, very similar to what happened here, where you're trading below with double rejection top, and we have that rejection top here in that push, pushing down to go back to where that first liquidity was. You're going to walk across it, check again, drop back down, rinse, repeat, right? Yep. It would be one thing to just say that. It would be another thing to like go through and see on a macro level that that's actually supported by like the big picture targets, and it is. So I'm not worried about it. I think it's going to be a bit painful, but I'm not worried that it's going to go low and just stay low. I just don't think that's going to happen. because big picture, they left a lot of stuff behind. It's the same reason why I thought we'd come back to 14. And even though it took a really long time for that to happen, I think I made the call out. Where was it? We talked about that in January. I said I thought it'd go to 14 potentially, or whatever it was, right? We looked at that video. I thought it would go to 14, then back down pretty low to 250. It went to 250 first, then it went to 14. But it ultimately, it does happen. Why did I think it was going to go back at all? We had a guy come on 2 weeks ago that said that was just random. There's no way anyone could have predicted that. It's just a bunch of manipulation. I'm like, no, the reason I thought that is because of this. This was left behind intentionally. It's not just the gap. It's the preliminary support and that earliest supply drop. In the way that the angles were setting up was to set up towards that end to come back up. But we didn't get the gap, which means it's still there, which means you're probably going to get it later. And it turns out this was actually a really good predictor of where that was going to happen, because this little bottom trend right here ultimately points exactly to where that kind of intersects the top. We later learned, of course, we did the analysis that was actually built out on waves on a cycle pattern that it would hit around May. So this was established in this early top that it would come back up. That's why I knew it would come back up. I wouldn't have thrown whatever I did throw into this. I can't remember the exact number, but it was a decent chunk of change. I wouldn't have thrown that right into here if I didn't think it was going to go. But I didn't necessarily think it was going to stay up there. So that's why I got out at like 10 the day when it opened. I was like, I think it's just an auto reaction kind of test. It hasn't gone back up here and checked it. It's building out forever. We're going to see that same kind of thing happen, I think, here. And I don't know exactly if it's going to go this low or if it'll hit 226 or $2 or just barely go below the bottom. I don't really care. What I think is more important is that once it makes this kind of rebound and comes back down, I'm not going to be bearish. I'm going to be waiting for that moment where I think it's going to react, because I think there's a huge amount of evidence to suggest that we're going to be up here building out along the major creeks come the end of the year, with the potential to then break out. And there's also a huge amount of evidence that we need to come up early 2026 back to those bigger levels. And it's not, it seems like a lot now because we're getting closer, but I was thinking this when we dropped down, and that was like 2023. So, I mean, it's been like 2.5 years for this build out to sort of form. That's a long time for a build out to form all together to get you back up to those levels. It's not a small thing at all. So I don't take that like as I think it's a big deal. But it's also taken that long. And that makes sense because on the macro wave, it takes about that long, or should take about that long. So this week, what I'm going to be paying attention to the most, and I've talked a lot about AMC today. I'm probably going to look at other things. I think it's safe to say it's going to pop to the 4s. I say the 4s because I think it'll go a little above to like 430. I think it might hesitate a bit at 390, like right below it. I think it's going to go to 4, at least. Okay. Then I think it's going to be coming back down. I don't think there's going to be much else. I think probably this month you'll see it go to 4. You'll see it chop. And I think it's very likely that it's going to drop. If it took off after that, I wouldn't be super, super surprised, but obviously that changes some things. There is a possibility, which is based on another setup that I kind of have abandoned, which was that setup that we were talking about where it's like, oh, it could be a January move. Well, the difference between a January move and a February move really has more to do with options trades than anything else, and what that setup would be. Because really, if you think about it, March being the second quarter, we saw this last year, there's usually a great deal of exchange that happens where after the first quarter ends in the year, or as the first quarter ends, you see that there's a shift where like the ones that aren't making good money get changed out. Like institutions make a lot of their picks around that time. based on the setup for the year. That's what I've read, and that's what I've been told by people who are, I think, smarter than me. But I mean, I could be a little off with that, but I think March is a really important time for like swapping out positions and stuff. Right now, AMC and GME are kind of in the same boat. Both have left some gaps open right below. They've pushed up. They need to make advances. Now, GME is in a different, very different kind of setup here because it hasn't actually left its creek yet. You could argue it did here, jump, and it's trying to, but it also rejected on the higher point, which is right around where the gap fill is at 26.88. It's a little different than AMC. So AMC is kind of above it with, it could come back down and fill its gap on the outside, and it would be healthy still. If GME comes back down to fill its gap, it kind of has to almost immediately retrace back up and sort of prove that it's not going to drop. I know it sounds like a weird thing to say, but if it went down to fill its gap, it's below 25, and it's hard for me to look at that and be like, oh, it's bullish. So that's why I'd say I'd have to kind of see it almost immediately, like kind of return back to the upside if it did something like that. Otherwise, I think it could still potentially go down to like 23 or really 24, which is the liquidity level that makes the most sense. That's the huge liquidity shelf that we have on GME. It would make the most sense, and I think that's what this was kind of aiming for. And my targets were like 25. Yeah, I mean, I think I said 25 like a number of times because I was looking at it coming down faster to like right here. This would have been like a week or so ago. It took a little longer. So there's a lot of big question marks I have for GME. It's a little different than AMC. At the end of the day, probably the best practice here is to just think about potential downside to 24. If it can't hold these levels here, if it goes for the gap fill, you'd be concerned about 24 maybe. If it makes higher highs or it makes a double bottom and then continues back up, then I'm really just looking at, or if it holds support now, I'm really just looking at overhead around 27. It doesn't really make a huge difference because I think that no matter what happens, it's got to get above this like 2770 area. And that's probably a safer buy-in anyways. If you're looking to move from there to 31, that's probably the better trade from here to here. So when I look at it big picture, there's possibility, just like AMC, for the same things. Like this is an S-curve down. It's got a long-standing creek. It's already there. In this case, this is the same kind of parallel structure we see on AMC. It's already there. It's a little lower. It's set up a little lower. Notice that this breakout is essentially right what we're talking about right now. It could jump that creek and be going right up here at 27. The same thing on AMC was higher. It was up here around, as the crow flies, it'd be up here around 360. I mean, it's quite a far distance. It's the same level though, proportionally. So for GME, it can get there quicker, but it's currently not outside of its creek yet. So it's got a little bit more to do, right? It also can't easily fill its gap unless it immediately recovers without risking sell-off because of this advancement. The pullback could be bad. You'd want to see if it comes back down again, that it doesn't capitulate and then it pushes out. I think it'd be fine if it did that. It's just a little more risky. AMC's outside its creek. It could come back down, fill the gap into the end of the week, frankly, and be fine as long as it holds a range here that's bullish. But ultimately, like that breakout level, it's kind of interesting looking at it now because I'm like, I wonder, we're talking about this being a potential halfway point for this move right along that creek on the cat ear. But that's not very high for GME, is it? If that's a halfway point, it kind of makes you think it's only going to go up to, yeah, like 30, which is really low. I wonder if that parallel is correct. Yeah, that's about right. So this was, that's the same parallel structure as this top here. This is the extension, You can see that the rejections follow it really well on the GME top here, coming down. And that is the lower 50%. That's the $30 mark. This one, which is the highest point, may reach all the way up to 30.50, which is where one of my markers is. I wonder what date that was. We think it might be that earnings dumps it, and then there's a quick rally, and then it starts going sideways. It's possible we actually run up into that and then dump. But either way, it's like Wednesday. It's the 25th and 26th. So the 25th on. So where's the 25th on this chart? It's way over here. Yeah, it's a kind of front runner mentality too. Like sometimes one of them leads over the other. People always say GME's in the lead, but that's not quite right. It's a mixed setup. Yeah, I mean, I'm not liking it if that's the case, because it kind of implied this would like compress into a corner going into Friday, doing like this kind of nonsense, which I don't know, man. That's kind of what GME did on this bottom too, isn't it? Where it like went sideways and low right into its bottom. I wonder. Yeah, I wonder if it's going to be similar. I don't know. I might have to look at something else, like EMAs and see where they are. I don't want to add more junk to this chart, but that's the 1 hour. It's right above. It did get pushed this morning a little bit, or checked. The 180 on the 1 hour is up here, right where it needs to go to break out, right at 27. So that's in the right spot on the hourly. I'm going to go to the 4 hour. The 4 hour, the 90 is same deal. It's right there at 27.50. This is interesting. So this is what I wanted to see. See if there was one that we had come recently below. The 180 here is what we hit this morning. 180 on the 4 hour. So that's pretty important. So there's definitely there's definitely a precedence to like really push this level. It's a really strong resistance is what I'm trying to say. Yeah, so we're kind of making it seem really bullish, like it might go up sooner and be right up here. In theory, if this were to continue to chop and had troubles going into like Friday or even Tuesday, it's possible you could be much, much lower by that point and be like down here around 26. And it'd be a bit more SOS-like, perhaps. You can see this top here at 26.76 going across. Like say, for example, that's the midway point of this move, which seems reasonable. It goes up to like about 30. There's another support at 26.80. So let's say those are the midway points here. And that does seem right. It splits it in half. An SOS could be positioned earlier only if it goes fast and then comes back down. But if it chops along it, I wouldn't be surprised if it takes a while. This might be one of those cases where GME doesn't move until Tuesday or Wednesday. I'd like to think it goes first, but it could potentially be significantly lower at that time, and it would still be able to jump the 4 hour here. If this is pulling down, the average will come down by Wednesday next week, the 19th. That's a different situation. It's not bad, it's just different. This doesn't go very high, does it? Oh, maybe it goes to 30 at most, and then it sort of stops. I got a 32 call. I'm not really worried. If it's going, I'm going to get out early anyways. But I'd probably be out above 29.30 since that's the ceiling here. I think if it pushes above that, it might run into some trouble. But I'd previously kind of assumed, not in like a hugely bad way, I kind of assumed it would go up through this and try to get to this top at least. And there's a trajectory here that meets up with that wave up at 32.70. It's just kind of a matter of opinion, I guess, about whether you think it'd be really strong. Of course, if it goes, it's going to be up here and go anyways. So, you know, it should be over here. Yeah, I don't know. I think it would be maybe one of those instances of like, we may even see something like extended hours that goes up there, but then we don't get to really see it. It's not just because the gap. I know the gap's there, but I think it might be something else too. We don't need to fill that gap. If we run later, we can fill it later. That ledge could be left alone. I mean, it's really darn close to where that intersection is too. Well, either way, 32, not 32. If it's in that region within $1 or so, I'm not too worried. My biggest concern, I suppose, if it's a late mover, that it would potentially break out lower and it could truncate the move quite a bit. If that's the case, it may only go up to like 30. And then it has like something like a gap up or something, and then just drives back through. Gaps up to like 32.25, and then just slides down and capitulates or something. I mean, that would be the typical thing, right? Is to see like some kind of big move and then have it pull the rug. Mm-hmm. Is it safe to keep buying AMC shares? So if it were me, and I'm averaging down, I would probably consider buying here. And you'd have to make a decision whether or not, because it's in the threes is good. I mean, it's still a good price, especially if you think it's going to be at $40 in a year. That's a really great deal. But if you're being really pragmatic about it, it may be that this is just an opportunity for a swing. And if you think it's going to come back later, then I don't know why you would hold those shares unless you just really want to keep that average. I'm not saying you should add to the selling pressure and all that stuff, but it's your choice. You've got to decide what's right for you. And no one else can tell you what to do there. So no one's going to know, first of all, unless you just say, I did this. But certainly if you were just trying to like find a good trade here and get some more cash for a potential low dive into like 2, then yeah, I mean, why not? There are not going to be that many opportunities, in my opinion. If this is what I think it is, and it goes back and tests 4 and it rejects, then it's basically at that point, I'd say it's near 100% certainty that it's going to do something along the lines of this, come down. So there's really not going to be a lot of opportunity after this point for the next few months, in my opinion. If it can't break out here, I don't think there's going to be a great opportunity to trade significantly higher again. So 4 might be the ceiling for a bit until the breakout. So that's maybe an important point to make, because some people are going to be like, no, it's going to go to the moon, or it's going to go up to $6 or this or that. And if you think it is, then trade it. But I don't think it is. I think 4 will be the ceiling for a bit. So I'm using it as an opportunity to do some calls and just make some money here on volatility. I'm probably going to be hands off again. I'm probably going to let go and see what happens. I'm not going to hold through that personally. shares are different for me. I've got plenty of positions that I bought in low. I'm not looking to buy more right this second because I've already bought more. I bought at like 3 or whatever, but I'm not going to 308, that kind of price, but I'm not going to continue to buy here. I'm going to wait it out and see what happens. So AMD is kind of making a run for it. Now I'm concerned. I don't know if it's going to come back down. I'm okay with it not coming back down. I just didn't think it would keep going. So this is a trade I've been in for a bit, and it's a mixed bag. I'm not going to get into the nitty gritty of it. I think from a technical perspective, it's very likely going to come back up to, look at the 30-minute chart. I think it's very likely going to come back up to, these are anchored on waves to the upside. These are bullish markers. This could indicate, as anything, a pivot on the 19th, could indicate a high point where it's going to come back. That's where the daily 180 is right now. It's heading that direction. So it's right where it should be. I've got 1, 2, 3, 4 markers that are basically like perfect in terms of like their directional supports and breakdowns. Those trajectories they're there. I mean, I really don't try to fudge anything on my charts. So if they're just there, that's just because it's technically perfect. There's been times where like I have done this and they intersect. Some of them intersect in one place, some intersect in another. Like that happened a lot on AMC, where you get like 2 or 3 that are going really fast, and then you get others that are going kind of slower, and it's really hard to know. And you're just like, it's not the best. But this one's really pretty solid. It's got a gap here up to 118. There's another gap to 123. There's another gap at 127. And I think there's another really small one up here around 136. And then there's an even larger gap up here around 150 to 167. This is historically like as oversold as it's been, I think, on the hourly or something like that since 2023. I found some other data on that too, with like Bollinger Band expansion and other stuff. People were saying like it's really, if you look at the P to E, price to earnings ratio, it's kind of back to where it was in 2023, but the revenue is greatly increased, which is really weird. The reason they're saying that is because they think that the gaming portion of their company, when they do, these guys do, as you all know, like graphics cards and stuff like that for gaming PC. AMD is typically the most popular because it's cheaper. So even though NVIDIA has all this crazy technology, their cards and their software, or excuse me, hardware runs like $1,000 for like their newest model. Whereas AMD, if it's somewhere around anywhere between like $500 and $800, is going to be seen as a significantly better product. So a lot of your market buys those, but their data center, which is about their AI revenue, that's the one that killed them at earnings because they didn't give any guidance for it, except to say they thought it would be tens of billions. And I think they're right. I mean, there was obviously like data out there about it, but they didn't participate in any of the rally for AI, and they're largely seen as way behind, and they kind of are, So what's being seen is that revenue from the gaming portion is coming down, and then revenue from data centers going up. And so the price to earnings thing is kind of giving you it looks the same as 2023, but their revenue is actually thought to be kind of increasing. So you've got this kind of crossroads of one part of their business is doing worse, like slowly over time, another part's doing better. But I think there's a lot of people who are saying that they're basically just replacing each other, but I don't think that's correct. I think it's more like this, where even if their gaming department, which I still think they have a big foothold in, even if that goes down, I don't see why that data center wouldn't just skyrocket at some point. It's not going to just equal parts replace their move. So this idea that the price to earnings kind of ratio is the same as 2023 because of revenue's higher, but blah, 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 blah. I mean, it's interesting, but it's also like, I feel it's a little bit misleading because it makes it seem like, their data center is just going to like catch up with and be equal to. That's the way the market's pricing it in. That doesn't make any sense to me. Like, I'm like, no, if they can get any kind of a significant foothold, and we've already seen Meta, who's your Facebook people, and Microsoft, I think both of them showed interest in some of AMD's technology recently, and those are NVIDIA customers. They like NVIDIA. And I think those guys have shown a lot of interest in some of the things that AMD is producing. I don't see why that just replaces it. So this whole like sell-off and all this junk that happened, I think it's just way overblown. I don't think this is worth $100. Very, very few people think it's worth that much. I found like one or two analysts that think it's worth 110, but most people generally still have it at 130 to 150. It didn't change. So this whole reaction here was just a really big sell-off on pretty much just a lack of guidance, that they just didn't describe what their AI stuff was going to do. And I think that's a big misstep. But I'm also a technical trader, so I look at the chart and I'm like, okay, so I see why fundamentally this happened, but I also see that there's a really strong S-curve here. It's almost done. I don't know. I don't think it hit 408.83. I thought that was the number. But frankly, if it goes, it goes. I'm not going to complain. I'm in positions on this. I'm going to ride it up. And I genuinely think it's going to be up here. And I've marked off some reasons why I think that, but that's one of the trades I'm in. Fang is another. Fang is weird because it's not the industry that most people here come for, and it's not anything to do with media or entertainment. But I mentioned this earlier. I don't necessarily know if it hit the bottom. I thought the bottom might be 157.50. Didn't hit that, but it gapped up. We don't know. Maybe the gap holds and it breaks out. Maybe it doesn't. It looks a little weaker than some others today. I wouldn't be surprised. And I even had this marked out anyways, like that. I wouldn't be surprised if it comes back down again. This is what I thought was going to happen before Monday. So before today. Thought it would come back up to like this 161 level and then drop again. If it drops down to 157.50, I think it's super bullish. And I've been waiting for it to then break out again in an SOS. This is basically like what I think is going to happen here. It's possible I'm wrong, as always, but then I'd be looking for that breakout and move back to 170. Some of the other ones we looked at, maybe a little more popular here, we've been watching NU just kind of tear, and it's just not stopping. It very well may go straight up to 15. And I had on my chart the idea of it going to 15. I thought it would have to make a bigger backup. It just never left this trend. It just kept accelerating. It's really just like a huge arc almost. I mean, it's a very odd way to see it go because in the grand scheme of things, like it's not exactly like a huge amount of volume. It just reversed and just kept going, you know? And there's a bigger wave here that goes all the way up as high as 1580, which is where the gap is. But I had actually looked at this on the big picture and was like, it could really benefit from coming down to 950. So I had thought that it was probably going to hit here, and that was my target. It was like 1230 or something, that it would come back up. We were down here at the bottom when I was talking about it. I think we were right here at like 1096 or something. And that's where the buy-in was. And I thought it would probably go to 1230, and then if it was going to go, it would back up and then run again and do a more proper cross. It just kept going. So at this point, is it safe to say it's just going to keep rallying into earnings? Maybe. I mean, this has happened pretty frequently on this stock where it rallies into earnings. So it may still keep going. I warned that on the daily, if it crosses down on the RSI, probably going to turn bearish. This has been very consistent with that. From these markers that I have on the chart, every time it's hit on the 4 hour and become oversold, it doesn't turn around until it gets overbought. So really this got overbought January 30th, which was a week ago. So I mean, it's been overbought for a while. But in doing so, it also recaptured the daily 180 up here. And I think that's interesting, because that's sort of where I thought it might go on the secondary move and then come back down to 1250. Now, as you can see, like it hasn't checked that yet. If it continued to rally, this could be up significantly higher by the time earnings comes. So you could have something like a pullback that does go back and check it, but it never goes back below like 13 or something. We just have to wait and see. So I'm not positive that's going to happen here or there, but it's just one to watch. I think it's a really easy to trade chart. So we watched it and we said, anytime this comes down, becomes oversold on the 4-hour, once it turns around, it doesn't stop until it's overbought, and it's been really consistent, and that's why we traded it, and it was a good trade. And if you traded shares on it, you probably made more money than I did, because the options chain was pretty much garbage during this trade right here from 1096 up to 12. Like, I just didn't make anything. You'd think I would, looking at the move, but there was so much pullback and weakness and pullback. Every time it moved up, it just sagged low, and then it would move up and then sag low. It just kept crushing those options down. So it is what it is. Sometimes you get it, sometimes you don't. But there was a good trade in here, and we called it out, and it was good. So I know that some people must have made money on it. It had to have, because it went up. It was exactly what we thought was going to happen. Fang was one that I've really been waiting for a while. I'm sorry, Wolf. Wolf was one that I've been waiting on for a while to kind of go down. I was really sick and tired of this kind of nonsense, because every time it pushed up, it would come back and make a weakness. You can see it did it here, push up, weakness, push up, weakness, push up, weakness. It's just constant. It's constant selling. And I was like, when earnings was coming up, what I thought was going to happen was that we would see if we did see an upthrust, that this would be like kind of a final nail in the coffin type deal, and that you would get like a sell back through and go ahead and hit that gap. Instead, we've been delaying and doing like secondary ear motions and all this other junk. At this point, okay, the common sense trader would just look at it and say it could be a flag. I'm looking at it and I'm seeing that it's trying its best, and this is the reason I thought this was a little bearish, because when it pushed up, it came over the previous top, then immediately goes down and makes a new low. That's usually a very bearish signal. That's not bullish, okay, typically. That volatility, more down than not. But as you can see back here, it sort of did the same thing before, where you had those kind of pushes with new lows, pushes with new lows, pushes with new lows, until it finally capitulates, drops to an official new low beneath the previous reactive bottom. Ours would be down here at 465. Interesting to think about, because if that's the case, then this could be, again, what we call a shrinking iteration. And I have some diagrams down bottom over here that we're talking about like a week ago or whatever, that, hey, if it doesn't confirm and we see those breakdowns, we're going to really have to watch that bottom. And at the end of the day, this kind of looks like what it looks like here. I don't know why I have it over on the side. It looks the same. But it happened earlier, right? That this kind of breakdown would come low, and that potentially this is a really, really good trade, but its entry is suspect. The entry that we had wasn't good, which is back here before earnings. That entry really ends up becoming like a pivot point later on. But unfortunately, it's probably going to be over here like near the end of February. And so we had talked about the intersections, how those, again, yeah, they could indicate where you're going, but they could also indicate potential bottoms. So I would not be surprised if we're down into the next Friday or two, or chopping, and we kind of are making that bottom right now. This is a pretty big macro. I don't want to say it's huge, but it goes back to 2024, October. So it'll be like a 6-month channel down, and it's essentially like a narrowing. So even if it comes and makes a new low, or if it comes down and just fills the gap, I think that's going to be it for that triangle. And if that triangle can break up, it will be going to near $14. The target for it is pretty straightforward. So I'm not saying it's going to get there in one fell swoop. It may hit like 11 and reject and then try again and go to 14, but it's going to be going up pretty far. So if you were able to trade this from the bottom, it's like a 200% move. I mean, it's a big move. I do think this is likely what's going to happen. So I'm watching it carefully. I'm not particularly concerned about it being up or down today. I really just want to see what happens now that it's finally gotten to this gap zone. Especially right now, I think it could pretty easily hook. And this is looking like the exact same thing I drew. I don't know why I drew it over here. like it was going to happen again. It's like up and then back down, right? That would be the flush. Boom, boom. So yeah, I think for now, this is pretty safe to say this is probably going to head down. I don't think it's necessarily going to hit a new low, or a super, super low new low, I should say. I would be very doubtful if this continued. I think it's likely going to hook. May come up as high as 570, and I think it's going to head back down. That's my guess. What if it doesn't? What if it goes above? Well, then it goes above. I don't know what to tell you. In order for this to kind of advance, it has to come pretty high. It has to come all the way up to 653. It's no different. It's exactly the same spot. Because this is a creek here that it could reject on. This is one it could reject on, and there's another one right below it. There's just too much. In order to advance, it'd have to do this. Oh my gosh, just like so much. It doesn't seem as likely. Let's put it that way. Based on this setup. But I think that the way that we have this isn't horrible. I think we pretty much got it right. Because if this is what I think it is, then we're really talking about just filling the gap. And I don't necessarily think it's going to be that bad. Like, it may go slightly below it, but I don't think it's going to go significantly low. And if it fills the gap and reacts, then that's just a distributive top that it's already broken through the range, y'all. It's like, that's not a big deal. It's just a distributive top that ultimately is just a backup. This could be a 1, 2, and then you have a 3. And I think that we have to keep in mind, like, the setups here, as long as they don't do something too crazy, right? If they create a spring here, fine, we'll see it. We'll see a phase B bottom and then a spring. It's possible, okay? And then it just goes. I think then you're looking at this as a very simple Elliott wave extension. Even if it does come all the way back down again, but especially if it just hits that and hits the gap and springs off the gap. So like it uses the gap like a floor at 478 and then it goes to like 473, but it doesn't go through the bottom. Then your extension up here is the 1618 is like 965, right? And that's a 3 potential. I think that's very possible. Very, very possible. So I'm really waiting on this one. I think it's a big deal trade. I think it'll work. After that point, I don't know. I'm not sure. It's kind of slower moving than some others. I still think it's going to go up here to the $14 level, but it probably would be a while if it stops at 9. And 9 is where that other creek is, so that makes sense. Right in that pocket here. Yeah, usually 4 is the longest, so maybe it does go to near 14, but it does it over here somewhere. Can't come back above or below 725. I could see that, just chopping here, building out. And if it makes sense, then it makes sense. So anytime we look at this kind of stuff, I just like to think about like where would the creek be at that time? And it's kind of right there. So it does seem very likely. So really this move up to 9 is kind of, 950 is kind of the first big one. And then it would back up for a while. And then the second move probably goes from like 727 up to closer to like 13 or 14. Basically that gap fill. I think that's pretty reasonable. Maybe by the end of March. And then like a lot of things, I don't think it's necessarily going to continue. I think there's a lot of resistance there. So because it didn't go at earnings, we don't have like an early push. I think we're going to see something like this. Could go pretty fast. I've got it out quite long, but you know, it is what it is. There's a lot of volume in this first one, so maybe it'll go really far and then come back and not take so long and push off again. Yeah, we'll see. I think it's a good trade setup. We just got to watch it follow through. Fang's just going. Now, I don't know what's going on. Maybe it's just going to go. Maybe it is a bear trap. I don't know. I'm okay with that. I'm already in my position. I just thought it would come back down. If it breaks out above 162, it's out. So I'm not sure. Hang on a second. Let me add an alert there, and I'll just have it there for myself. It might do it. Sorry. I got to check something real quick. Yeah, there is a really steep angle right here to get back to that middle. Maybe it just squeezes up to... I do have this as a marker. It's a competitive position too, because it's like halfway between both right now. That's interesting. So maybe it just goes all the way up to 165. It's possible. I'd say the same for AMD, but I really feel like AMD would do better to finish its bottom here. Like, I don't see what benefit there would be in having a gap here. Nor do I see it really making any significant leaps. This move obviously looks a lot like what I drew, where it needs to cross the middle. So I suppose if it holds, it holds. It'll just go up to 115. That's the next place on this downtrend. I'm kind of looking at everything all together today. Just wondering what the market's going to do. Felt a little bit discouraged by that this morning, seeing all those gaps up to the upside. Oh, MPW. This is another one that I think a lot of people maybe have their eyes on, because I have my eyes on it. I wouldn't suggest that this is necessarily ever going to go beyond here in the current time frame at 490. And if it does, there's a very good chance it could just be like an upthrust, maybe even around earnings. Historically, they've not presented their earnings on that date, so I wouldn't be surprised to see it kind of chop sideways until who knows when. They're really bad with that. I don't like it. But the earnings estimations are never right. I'd be surprised if it was right. Every single time it's been like a week or two off or something ridiculous. But this white line that you see coming down is the major downtrend. So breaking above it, much like what we did over here, if it's met with any kind of distribution, even if you popped above it with some strength, if it comes down and it can't find support, it's going to drop. And this is one that, much like what we saw in AMC, it's pretty much the same exact motif. If this comes up and it fails to continue right where it's at, you can see that's the intersection there of that downward motion. On the wave, if it can't move there, it always goes down and tries to make a new low. Or at the very least, it's going to come down and kind of wrap around these low areas in the threes, right below 3. I think that's probably the goal. And there was a little bit of a weird dip that happened right before it moved up on January 13th. Again, just kind of suggests to me that this might be like a move up in order to just sell back down. And I think it'll go back down to the floor. Weirdly, this bottom's at around 292. It's very similar to what AMC was in 2000. And yeah, I got an alert on Rhyme this morning, I think. So I don't know, it was at 45 cents or something. Not to jump around too much. Oh, that's good, man. Yeah. ADTX of 15. I'll check out ADTX. I don't make fun of you for market cap stuff. I do think volatility goes both ways, so you got to be careful. Sometimes we have ones that are winners and sometimes they're losers. But yeah, you can make a lot of money on penny stocks if you get in at the right time. And if you got a knack for it, that's great. You should use that to your advantage. You got to play your strengths. So I don't disparage that at all. I just think that they're volatile both ways. So got to just be mindful that sometimes you're going to be there, sometimes not. But this is a setup that I've been watching for a while. I think it looks a lot like major squeeze potential. This is a highly shorted stock. It's a REIT and real estate investment trust. And so when I look at this security, I'm pretty darn sure it's going to be making moves back up to 10. It's more just how it gets there. And the setup currently looks almost just like what we see in 2020 on AMC. Albeit, it's a mixed. There's a mixed kind of sentiment here with this one. And I do have like this kind of just going right down and breaking out. Timing wise, this one doesn't seem like it would be up at near highs until potentially late this year or maybe even early next year. So unlike AMC, which kind of have it going earlier, a big move, I don't necessarily think that's going to happen here with MPW. I think there's a potential that's a little slower just based on the timing of this wave. It's just not as fast. So I'll come back to it every now and then and check on it. I traded from, here's another trade that I made that was decent recently. I traded from like 3s up to about 480. Again, put that on the Discord group so that if you wanted to, you could trade it. Simple trade, easy trade, 10% or whatever. Options is not a very good trade. So it's just not, the chain is just really bad. Unless you're doing like long term, it's not going to be very lucrative. So yeah, we went over Wolf. Let's do WTO. This one we were requested, and then I'll go to ADTX. We've already done the big ones today. I don't dislike WTO right now. Every now and then I kind of clean this chart up, and it might be time to do that because I'm starting to look like gunky here and I don't like it. So I'm going to try my best to clean it up. I think these levels are correct, but I'm going to like leave them just over to the side for now. Meaning like the levels of where you would go if you break here would be there and there and there. We didn't make those moves, so there was a risk on entry here in that it hadn't confirmed yet. And if it did go, you would have made money on it. But the problem was that it kept setting up lower lows. So just like we talked about recently, anytime you see it push to a higher high, that could be a sign that you're trying to reverse. That is a signal that's bullish, but especially if you just broke a trend down. So like this was going downward, it broke out, jumped out from that trend, it goes up, makes a higher high, but then essentially immediately makes a lower low. Like there's a second move up, it double bottomed, and there's a second move up that doesn't go as high. So it doesn't make another high, and that's not good, and then it goes and makes a lower low. Could it have been a spring? Yeah, which is why I said, well, at that point, then what you need to see is it jump the creek. It has to come up here and go. That doesn't happen, then this is just weakness because it hadn't made another high. It wasn't able to reverse the trend. It's very simple, very simple. So direction here was determined largely on the 29th of January, and where it kind of crapped out here on this M cross and then dropped through the ice level. Now that ice level still exists, so that's one we can use. I've got it here on the chart. We'll keep it there. Sometimes that ends up being really important later as a wave back up might occur. And one of the things we talked about was possibly that this could have a breakout as soon as today that could come back up and retest this top. Now, I'm not 1,000% sure that that's going to happen, but it certainly is a possibility. Now, does this mean it's going to run? No, not necessarily. You can actually say I have it potentially coming back down. So the trick here is that on the bigger picture, that does represent like a higher low, right? Because we made a low back in December. That's at 25, and it's just meeting that trend. There's nothing super fancy about it. It's just kind of meeting that trend, right? And if it can hold that trend and hold this middle, then we should see it react back up towards the previous top of the trend. We noted that this is the first time where we are right now in WTO that it's even trying to hold the middle trend. Every other time since September 2024, which is when the split happened, it's been struggling and struggling and struggling. It's just distributive action one after the next until these two, which ultimately make consecutive higher highs. Okay, but here's the problem. The first higher high, which definitely happened here, doesn't exceed like the total, like the grand total of what I would consider to be this like trend down, right? It just kind of comes to like 3/4. And then, unfortunately, it goes and makes a lower low. So it started here as a higher low, right, from the previous one in November. I'm not going to call out numbers because there's like micro numbers, and they're really, really small differences, right? So it's basically like a double bottom. It's so close. Pushes up, makes a higher high, but then it uses that as a flush mechanism to do that 50-50 through that support level down to the bottom that now is the low around 24.9. So this is another example of like penny stock stuff that it's quite volatile. It could be good, but it also could be very, 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 very bad, because if this were to go up and then break through that middle, kind of like it did previously, which was what happened, it went right here. So if this goes up, let's say it does the same thing right now, and it pushes up, I would be very concerned that the next action might be to reject if it can't break out from this kind of bigger downtrend, that the next action might be to redistribute along, and it might go a little over this top, around 36. So the issues of like where is the confirmation, it's still the same levels. It's still like up here, and then so on and so forth, because this is really bringing us out to a bigger picture reactive move here that just hasn't happened, and it may not happen. We don't know. If it doesn't do that, then the only thing this could be at this point is one of two things. It could be that this is indeed going to do kind of a bigger double bottom, kind of like this one, where it's like, oh yeah, there's a double up thrust, and then it does come down and it makes, either a double bottom or a slightly lower low, and then you get this kind of like massive push. This would be more penny stock like, that then sinks all the way down, right? Again, sort of like what this one does, but on a bigger picture, expanding, and goes down to like 15 cents or something ridiculous. In which case, great, you got out at 50 cents, you're happy, you don't really care. I don't think that's impossible, but it's definitely like a possibility in my mind because of the way this stock is run in the past. So it is possible that that could happen. But the other alternative here is a little simpler, which is just that this goes up, and if it flushes back through the bottom, this is very simply, again, a double flush already. You don't need a bigger one. And so there's an element here of uncertainty in that principle of like, well, I don't know which is setting up. I really couldn't tell you. It's going to be a bit tricky. And I think this one's likely as a possibility, but we'll have to see what this does as a higher high. If it pushes up above this level, does it break down through it again? I think that's going to be the big clincher, and I'm guessing that it will. So I'm thinking it's going to run up to like 34 cents, and more than likely, I'm not 1,000% sure, but more than likely I think it's going to come back down again. If it managed to break out from that point, then yeah, you're talking about a potential upthrust motion that just goes above the previous top, the 44 cents. It's a weird one. Yeah, I'm not really sure. I just wouldn't put it past them, I guess, to do something like this where it's like crazy, because this is just a really highly volatile trade. So there's a little bit of a widening going on there. So that's probably the one that would be met, because that comes from, it should be coming from this bottom, but it's not. Yeah, it'd be like right here if it does do that. So this may not ever get back above 50 cents the way it's going. This wouldn't surprise me. But yeah, so this is one of those trades where it's like short-term potential upside at 35 from 26. Still a big move. Then from there, I'd be concerned about it coming back down to 25, like the actual floor down here at 24. 24.73. 24.73. Those are all decimals, not $24. And then we'll see. Honestly, it could be that fast. I wonder what this one did. I'm curious. Like if we ignore that move, because this happened in like extended hours and it was like crazy volatile. I mean, it was like way up and then way back down and then way back up again, regular trading hours. It was a really wild move. So maybe, isn't that like way up there? It is. So this one's already established as a cat ear line here. So there's certainly a potential that's it. But it might be more, it kind of looks cookie cutter, like it's just going to do it. And I can't really prove that. It's pretty long-winded if it did do something like that. Does it come down to like 15 cents by the end? Probably a nail in the coffin type move. Shoot, this thing didn't even move till like the last possible second though. It kind of implies that you would have we'd have to wait. But the implication here would be that you'd actually have a really long, kind of boring wait between these two markers. So, yeah, it could be quite the obnoxious thing. And then there'd be some kind of hugely volatile double swing there. Actually, that does make sense to me. So there was some kind of offering at like 60 cents or something too. Just kind of strange. But I'm not sure we're ever going to come back up. Be a big what if question. I mean, potentially, I guess if it just kept doing that, you could just keep going. Oh, man. Charge point, man. What the... I saw another, like, a slur of articles talking about this move. It just doesn't make any sense. And there was it makes sense from a technical standpoint if you look at this breakdown as like a falling triangle, but it doesn't make sense from a fundamental standpoint. There's just no real reason for it. And there was it's weird because I drew this before. I drew this back over here. I thought it was going to break up and like fake out do the cat ear thing here, like a fake out move to the upside, and then drop through. It didn't even do that. It just dropped. But it's so like straight line, mechanical, weird looking. I saw a slew of articles. There's just nobody's changing their targets. It's like still like 250. Like this is clearly undervalued by like a significant margin. I look at that long term and I was like, yeah, I could see that because there's a pretty massive wave down here that wasn't ever met. And it'd probably come back up to like at least 150, maybe 2. But it's just like an ugly chart at this point. Slide downs. This to me is what I'm looking at long term is like, well, it should be, this looks like a beak almost now. Like it's coming down in like a point. And that usually results in like a pretty massive reaction. I think it's going to react to 120. And I don't think it's going to necessarily go below $1 after that. I think it'd be sort of one of those things where it reacts really strongly. If it does come down again, going into May, I just don't know what to make of it. Maybe it'd be this range here to here from wherever the low is. But I think it'll come back out and make new highs later. And I don't know why it wouldn't come back up to 250. I get the whole EV thing being crushed by Trump presidency. We talked about that a long time ago. But there's a gap up here. I mean, there's all kinds of stuff. And if the chart changes and it doesn't, at the end of the day, if it doesn't seem to warrant like continued sell-off because of fundamentally it's not dead as a stock, it's just kind of a weird position to be in, watching it go and drop 20% for no reason. And I think it was an opinion article, but they were talking about how like sometimes if institutions are in a stock too heavily, it can cause massive sell downs if it breaks certain levels because of triggered stop losses. There's a kind of a rush to the door to get out. Even if the stock may eventually go back up, there's not a lot of institutional holdings in ChargePoint. BlackRock is the biggest. I think it's only got like 5 or 6%. But you could see why, like, if it continued to sell down, it could get really bad before it got worse. Because it's mostly retail investors in ChargePoint, which is a catch-22. Okay, well, I mean, this is a super strong trend. Kind of squinting my eyes. I see 1, 2, 3, 4 major checks to the upside. This is probably cat ear type stuff. I'm trying to adjust this. So I'm looking at where the first top was, and that's over here, January of 2021. And it came across, and then that becomes a bottom in January 2022, a year later. So that's the wave. Rejection, breakout, rejection, support. So this breakout, this rejection, and this is support. So that's the marker that we're going to look at as our main entity, Creek. I think it's the right one. And then from that point forward, maybe a little bit of widening, but I think for the most part, this probably would just be considered like a series of channels with the dominant one being here. And you can see the only other marks through it are kind of like up thrusts, especially when you see stuff like this where it's like a massive up thrust and you can see where it got hung up and rejected. It's right there off that top. This was in, well, it was at that split back here in 2022 in September. So yeah, I think that's probably your main channel. So where are they going? I don't know. This thing's endured multiple splits at this point. It's dropped beneath the lowest trend there. This was the original trend when the stock opened in 2020. You did this chart before. I know. I think maybe I have, but I could look around for it, but It's good to do it again anyways. There. That's your current downtrend. Maybe even like right where that gap is. It's good to do it fresh. Yeah, that looks right. It's a weird chart because of this bizarre rejection here. But I guess that was it right there. Right there. It's really strange. And the support, excuse me, is right here. Yeah. I remember this now. Oh, almost there. Okay, well, not to like spook you or anything, but it is kind of coming to that point where it's going to make a decision pretty soon. You see how when it compresses like this, there's not really anywhere else to go. You either break out or you don't. So I think in looking at this as objectively as possible, I would suggest that it's probably going to make that decision very, very soon. This is a very strong trend too. It's not like the other one up there is kind of weak. This one's really strong. So it's coming to the edge of the channel here. So probably a good one if you want to trade volatility to just put a heavy stop below like 6 cents or 65065. I'd love to say it's a wedge, but I don't necessarily think it is. It would be like saying this one was a wedge, you know? Like it is, but it isn't. It's also like a triple top kind of motion. You see the same pattern also is right here in the RSI. It's, I don't know, I use the cat ears a lot, but that's pretty much what it is. So it's a breakdown when it's weak like that. And it looks like it's kind of a rinse repeat right here. Granted, as you can obviously tell, this is doing so on a different time frame. And it's below that trend. Let's see what that looks like. RSI just bled out forever, like it was nothing. I mean, it could still drop back down to like 17 or 16 here, no problem. Let me check one more thing. The angle here is a lot better though. It's a lot less steep. You see the angle of the creek? This one was really, really steep. So it goes really far. This one doesn't seem as bad. It doesn't mean it's bullish. It just means it doesn't look as bad. I would say there's a better chance it doesn't break down. But RSI has already kind of given you a little bit of an answer here. So previously, if you look at these, I call them ice levels, they really correspond to the bottom support here, right? From August 2024. But you see how this is just a breakdown of what would have been, could have been a trend here. And it's a weakness, and then it comes up and it's just distribution along the creek, and then it drops. You don't want to see that happen again. So what I'm looking at presently, and honestly, it's kind of worse in some ways because this is positioned like low, suggesting to me again that it could potentially come back down to that marker. But I would use these two, and you can see it's sort of the same deal. Like you have possibility here if it squeezes through that it's going to like melt up pretty fast. And I would probably use this drop as a reaction there and say it comes back up to like 35 cents, which seems reasonable. maybe back test that. I'm not 100% sure about that. Where did this split happen? Hang on. Happened right there. So yeah, that first drop here, you might see a reaction there. And that lines up with 32 cents. So it seems likely that could happen. And then let's check out this trend. If it's establishing a new trend to 30-something cents, does that match what we see in the beginning? And it does. So that trend is also in sync with it. Really, I'm talking about this right here, but that trend is in sync with that move here. That hook right there in the very beginning. All right. Well, I mean, it looks pretty solid as a potential for upside. From like where it is now, that's a big move, 8 cents to 30 cents. I may not be too overzealous and just suggest that you look at other levels. Like there's a lower one right here that's also being used. So this parallel is really very concise. And then this guy here is probably the halfway point. So let's make that more bold. Yeah, those are like quarters. So there's a possibility if it breaks out, maybe around Valentine's, it could come up to 132. It's not out of the question that we still hit 132, but it happens later, like in March, in which case, who knows what happens between now and then. This earnings is around February 26th, so it could be like a choppy mess until near March. Now, on the other side, on the flip side of this, you have to use the 50-50, I think. And it looks like it's also there. See this like triple top here, where that gap is? That could be your 50-50. Now this could drive the price from where it is all the way down to 008. And I don't know what would be the benefit of that, but yeah, so this is kind of a dangerous play. Pretty big risk involved. I don't know. I mean, if it does it, then it just reverse splits again. I mean, I don't really know. They can just keep kicking the can. I'm not saying it should go there. I'm just saying that's kind of the number I'm seeing as likely. You kind of split the difference and say like 1 penny. I would say that's a likely one. Also, I'm just kind of moving it up to the top of that gap versus the bottom. It's 228. Yeah. Well, if it's down at a penny, people are definitely going to vote it, but I don't know why you'd want to do that. Yeah, so this RSI is set up in which you could definitely see this just sort of chopping for a little bit longer. I don't necessarily think it has to make a decision right away. This probably could last till Wednesday or so of next week, and potentially. But after that point in time, I think you're going to have to make a decision by the 20th about direction. So I think you're either going to break down and head back towards RSI that is near 13s, which is reasonable. It's happened before. And that I think is going to be around a penny. Unfortunately, that's just where it is. Where you're going to break out and use this trend, which has been used. I mean, the good news is it's been used quite a bit. Maybe this props up into earnings, into the vote. And it's the opposite. And I think that's fine also. I think that would make sense because coming out of that area, it is the right measurement. It's just, you got to consider both as a possibility. So, because at this point, doesn't seem to make, there's not really any indicators that would make me feel like this is definitely going to go up. I do think that this looks better. This whole MACD is all messed up because of the split. You can't even see it. Yeah, I mean, it's narrowing and going up. Just like, again, the RSI is kind of rising. So there's a potential here for a, what we call like divergence. But it's got to make a bottom. I think the same thing for the daily. So ugly, can't see it. Yeah, daily's kind of rising. If I were going to be as judicious as possible about it, I would probably suggest that this is more likely going to go up than down when and if it breaks. That line's not right. I don't remember what time frame I was on, like 4 hour. Yeah, I think when and if this breaks, when it breaks, because it will break, it's coming to the end soon. It's got to be by like next Wednesday or Thursday. There's no more space. I think that it's likely going to have a greater chance of going up, perhaps a run up for a few days into earnings. So yeah, this is a good move here in it if it goes. It's 200%. It's a big move. Again, I might be a little overzealous. And like I said, it could be that there's a early jump here that doesn't really resolve itself right away. It takes a little longer. It could be another month, frankly. There's really no guarantees. I don't know, if it breaks low before going up, that usually indicates a stronger move. But it breaks low. So you're left kind of like, most of the time the reason it's a stronger move is because they've shooken out stop losses and they've shooken out like the final sellers, right? And so there's like the weaker hands, right? So there's a sense of direness to that kind of move. And I mean, it's usually very volatile and strong, but I got to be honest, it's a hard one to read. If it does something like that, you're just thinking it's dropping. What else are you going to think? There's not much here to look at. This to me is just a risk-on play. I mean, you could trade it with knowledge that, yeah, I might lose whatever I put in it. But I could gain a lot. Obviously, if you spend $1,000 on this, you're really not spending more than $85. I mean, or you buy 1,000 shares, it's $85 or whatever, right? So it's not like a huge buy-in. Yeah. I don't know. Flushes are flushes. They're usually built around a particular level, but you have to find out if it's like laddered. So if there's like another layer above it, that's actually a bigger marker, because sometimes that's the way it's built out, and that's what gives you the bigger moves. But they're not these little tiny guys. Like I could mark them off, but it's just marking them off, you know. Like this right here, I would just say there's one right there. That one's pretty easy. This one is like a maybe here. where that gap is. There's another one maybe there. That looks more like a parallel structure to what we've seen previously. Yeah, and that's kind of holding up as a parallel everywhere we go. Yeah, this one supports the idea that maybe this goes up to 31 cent, which is close to where the target would be, or it is where the target is. I suppose that's the bottom. Really, that's at earnings too. You see that? So I don't know. I guess if the idea was to get the target kind of perfect, we'd have to go measure it. But sure, I think this could come down to like 6.7 or 7.6, like drop down to here. Like I think that would be reasonable to this level here before it goes anywhere. 7.7. That's 7.7, like 7 cents. Yeah. Well, I'm kind of done for now, but I gotta go and do other things today. But I do appreciate you guys hanging out. It's lunchtime for me. This might be a really good trade. I don't like hate it. I think it's good. I just think we're gonna have to wait and see. Maybe a good indication of breakout would be coming above this 4 hour with some strength after jumping this creek. I don't see it happening like today necessarily, but I think by the end of the week we should, if we're not out already, it's probably gonna be on Tuesday. I mean, it's got to be soon. There's just nothing really here to look at, so maybe Tuesday will be a big day. That's right where it intersects that kind of end. I'll put an alert here at 9 cents, right above. If it comes back up, that would tell me it's out of the creek. Otherwise, I think we're waiting for 7 cents. I genuinely think that's more likely, and we may get that big move. But like I said, this could represent something of a pivot, which means that this is really just giving us the middle of a wave here. So it's important to note, like, that target's good. I think that's a real target, the 31 cent. But this doesn't mean that it can't go lower in this area. And we really don't have any idea how this might come through here. There's just so many different things that can happen in an earnings, especially if there's a split announcement or something. So I wouldn't be surprised if this ends up being kind of the middle or even the low. Could go to 5 cent or something first. So it's just hard to say. Could be like that. I gotta go. You guys have a good one. And we will talk to you later.